Welcome, everybody. My name is Tom Paven, and I'm the president and founder of Class 101, and we are excited to be with you here tonight. And we want to welcome, first of all, you parents that are on here, right? I mean, this journey is coming to this point where we're getting ready to do financial aid here or start that process here in a couple weeks, and we want to welcome all the parents around the country. As you enter into this what we call FAFSA season, getting ready to start here in October. Our students, if you're a student on here tonight, welcome. This is about you and finding that right fit and the right college and also making it more affordable. So we're glad you're here to learn about helping to pay for college and to do that. We have lots of friends. I don't know if you saw some of the colleges or different things that popped up, guidance counselors, school administrators from around the country joining us here tonight. So we want to welcome you. And we have our team members, our college planners, college advisors, our franchise owners from around the country. We have lots of experts on here. And we are really excited to have everybody here tonight. Speaking of, I do want you to notice on the bottom, you see a Q&A. That's where we'll do all of our questions tonight. I know we got you rolling on the chat, but if we can have you go to the question and answers, we actually have a team that will be answering some of your questions. Some of them might be, might be personal or might be specific for you. So feel free in that Q&A to type in some questions. We will have a bigger Q&A at the end of our webinar tonight. So some main questions, we'll be answering those tonight. We know one thing. We know that parents are nervous. We've been doing this for 25 years. And every time, right, we want to, as a parent of two, I have two in college, and we do these financial aid forms every year, and you're nervous about helping to pay for college or figuring out how that money's going to work. All of us parents want to send kids to the best schools that we can. That's the right fit for them. But there is this financial side. And so we're glad that you're here tonight to learn about that financial side and how to make college more affordable. And we're going to educate you on that. A lot of times people are asking, are you ready? Right? Are you ready for this college? Are you ready to be empty nesters? Are you ready to have one go off to college? And what we want you to be ready about is the financial process, the financial aid process. And so tonight, you'll learn about and see our 50-some locations that we have around the country in 25 different states. And we have experts in all these areas. But tonight we have two of our most veteran seasoned experts on this FAFSA with us tonight. Our best of our best are here. And so Karen Feemster, if you can wave, Karen, from Franklin, Tennessee and Nashville, Tennessee, our franchise owner there. She'll be doing the second part and a little bit more in depth in filling in questions in certain parts of doing the FAFSA tonight. And then we have Randy Stegemoller. Hi, Randy, from Carmel, Indiana. And him and his family and his wife also own the Bloomington, Indiana franchise and a location down in Florida. And so these two experts tonight bring 20 years experience with their own children, with hundreds, if not maybe thousands of kids that have gone now through this process with them over these years. So these are our very top people that are going to give you advice tonight. So I'm excited to be able to do that. So we're going to roll in with Randy. We're going to get us started about the process of financial aid. Please feel free to type in your questions in the Q&A, not in the chat box. Again, Q&A, please. And let's get rolling and hear about financial aid.
Sounds great. Thank you, Tom. All right, so everybody's here about the FAFSA, free application for federal student aid, if you wanted to know. But anyway, the FAFSA is what you're going to be working on. So we kind of want to just open up the mystery. It's something that sounds kind of scary at times to some people. Others of you that are used to this, it's no big deal. But I want to make sure that we understand exactly what we're doing and why we're doing the FAFSA. So thank you for being here tonight. Let's start out by talking about financial aid. I've had people come to me and say, hey, we're not going to get financial aid, so we don't need to do the FAFSA, making that assumption. So if that's you, it's okay. There are other people that think that too, but let me bring something around for you. Financial aid is more than what you think it is. financial aid you are eligible for, your students are going to be eligible for in different forms. And we'll talk about those different forms, but the FAFSA is the key to open up all of that financial aid for your family. So let's talk about the types. It's made up of scholarships and grants and loans and work study and things like that. But there's two real facets to it that we want to talk about. One is need-based aid. And I think that's what most people think FAFSA is, only about need-based aid. And it is intended for need-based aid. Yes, that's what it's there for. It's going to help provide loans. It's going to potentially get grants for Pell Grants and other types of grants that institutions offer you based on two things: your income and your assets, both parents' income and assets and the students' income and assets. They're going to look at each of those four categories, and they're going to determine if you have need. We'll talk about need in a little bit, what that means, because it is a little technical. Now, merit-based aid. I had a parent yesterday saying, hey, I think if I do the FAFSA, I might not get as much merit aid because they're going to see my situation financially. Not true. These are completely separate buckets. Merit-based aid is not going to be affected by your FAFSA for the most part, okay? They are not going to look at your kids' grades and test scores to determine how much need you have. That has nothing to do with it. Merit-based aid is literally, it's automatic. If you hit a certain GPA level and you hit a certain SAT or ACT level, if your student does that, they have earned merit-based aid, and they're going to get that still offered to them regardless of what you do with the FAFSA. Now, the FAFSA is about need-based aid, but it also has some other facets. So if we go to the next slide, things that are going to happen with the FAFSA this coming year. Back in 2019, Congress actually simplified this form, or came out with the FAFSA Simplification Act that is intended to simplify this form. There's more than 130 questions on the FAFSA of late. And this act intended to make it shorter and easier for each of you to fill out. It's like filling out a tax form. If you're comfortable with a tax form, then you're going to be comfortable with the FAFSA. If a tax form is a little too complicated, it's going to be somewhat complicated. But the beauty of the act this year is they are simplifying it, and they're going to be rolling that out in stages. So we're not exactly 100% sure what they are rolling out this year. We'll know October 1st, because October 1st is when it opens up. That's not when it's due. Hear me correctly. It's not due October 1st. It opens up October 1st. And but some of the changes you may see if you've done one before, if you have a student that you've already done a FAFSA for, or you remember doing it because you went to school for your master's recently, is the number of questions have been reduced somewhere in the 30 area, around 33 questions. So that's a lot easier. Another thing that you may hear is we have a term called the EFC, or expected family contribution. It's just a number. It's really not what you owe. It's not, and that's confusing because it says expected family contribution, but that's not what's expected. So they're changing and rebranding that. I'm not sure if you're going to hear the new rebranding or not this year, but it could say Student Aid Index or SAI. It's the same thing as EFC. There is no difference. It's just a rebranding. So either one you see means the same thing. It's the amount of money, or excuse me, it's the number. I even made the mistake. It's the number that puts you in order with other students. So the bigger your number, the more you can afford compared to somebody maybe that has a smaller number. If your number's smaller than somebody else, then they're going to try to help you more. So the idea is to get the lowest number possible. And then the third thing that is potentially going to happen this year is there were some advantages. There were some discounts when we had multiple students. That may be changing this year. It has been changed in the Simplification Act. We're just not sure if that piece is going to come to fruition this year or next year. So it may, if you've got multiple students in college, there used to be a discount for that. That may be going away this year. We're not sure, but those are some things you might see that are different if you've done one. But if you've never done one before, it's going to be brand new, so it doesn't matter. Let's go ahead and flip slides. So these are some things, some financial aid terms that you're going to hear, and they can be a little confusing. So I want to go through them just so you know kind of what they are. Some of the main ones you're going to see definitely are scholarships. Scholarships, that's money that your student is earning that you're not having to pay back. Grants tend to be need-based, but there are some that are not need-based, but they're usually given by the institution. And it could be a Pell Grant, that's a government grant, or it could be a grant from the institution, usually need-based. Stafford loans, you will hear that term intermingled with just student loans, okay? Same thing. It's just a type of loan that's offered by the government that is deferrable, which is kind of nice. You can defer that until the student either graduates or at least near the, if they drop below half time, technically your that trigger starts counting down till you might owe those, start paying those loans, unless they start back up at full time again. So there's some technicalities behind it, but loans, we're going to owe money back on those. Athletic scholarships, obviously that's money that's going to come through athletics. We see that in any talent. You may be a musician, you may be a dancer, you may have, you may be going into ROTC or something like that. All of those have different scholarships that are connected to them, and another way to make college more affordable. Multiple grants. Work study is kind of unique. That's probably one we should cover. Work study is where you can be awarded based on need through the FAFSA, a work study opportunity. And one of the things you'll have to select when you do the application is, does my student want work study or not want work study? Work study is intended, if you have the need, it will give you a certain dollar figure in work study that's available for your student. So maybe it's $2,500 in work study. Well, that means that they can get a job that's provided usually through the campus, where they're going to work down the cost of their education. It's going to pay for that up to $2,500 in a job, whether that's at the library or working in the cafeteria, wherever that is. That may be something you want your student to go for. Some people say, I don't want them to have a job their freshman year. Whatever your decision as a family, I want you to understand what that is. So you can elect that, or you can say no to that when you do your application. Parent Plus loans is another big one that tends to come up on this. That is where sometimes there's a gap between how much money you owe and how much the college is covering for you. And that gap then can be covered by a Stafford student loan. If there's still a gap, because there's a cap on that, a student loan, sometimes parents will take out a Parent Plus loan to cover the gap, to cover the entire cost. But remember, those are also deferrable. They can be deferred to the end of either graduation or when that student decides to stop going to college. Okay, let's go to the next page, please. So everybody wants free money though, right? We're not doing the FAFSA necessarily for the loans, although it is an advantage. If you need to take out a loan, it's there for the student. If you want them to invest in their education and you want them to have some skin in the game, some parents will have them take out a student loan for that purpose. It's there to be used for that purpose. And again, the nice part about taking a loan out through this program is that it's deferrable till after the student's done with school. But let's focus on the stuff, the free money that we don't have to pay back, right? Merit-based scholarships is what your kids are working on right now. Their test scores and their grades is what's going to provide them that merit-based scholarship. That's free money. You want that. They're working on, if they're working with Class 101 advisors, this is what we're focusing on. We're trying to maximize those numbers for your kids and with your kids. Grants, if grants show up on the FAFSA, that's free money. You do not owe that back. Okay. So remember, grants, scholarships, both good words. We want to hear those words as much as possible. There are additional scholarships though, to keep in mind. Some are based on a competitive type situation where it's their major and they're going into a certain area, and that college within the university has certain scholarships for that major. Those are competitive scholarships. You want your students going for those, and we're helping them with that if they're one of our clients. So realize we're going for those as well. That's again, free money. Outside scholarships, Coca-Cola scholarship or Burger King or Lilly or your employer or, the local VFW or your bank. All of those are kind of outside scholarships. Again, That's free money. You don't owe that money back. Your students don't have to pay that back. So that's the type of thing you want to be looking for. And again, Class 101 advisors are helping your students do that if you work with us. Again, all the talent scholarships, again, free money. All that's free money. That's what we want to be pursuing. So when you hear scholarships or grants, that's good, right? Okay, let's go to the next slide. So really, if you're working with a Class 101 advisor, we're really using these tactics, these 5 ways to lower the cost of college. If you're not working with an advisor and you're just here tonight to learn about the FAFSA, these are the things that we're focusing on with the students to make sure that we get the cost of college as low as possible for your family. One is picking the right schools. That's key, right? Picking the wrong school is potentially going to cost us a lot more money. We need to find schools that are generous, and not all of them are. Trust me, they're not. So we need to find the right schools for your students, and we're trying to help with that. ACT, SAT, GPA, resume, all of those things are helping toward that merit scholarship and competitive scholarships that they're going to compete with other students on. So maximizing those, the difference between a 3.5 and a 3.8 is huge when it comes to money. So if we're going for merit scholarships, we want to maximize all of that as much as possible. Completing the FAFSA is one of those 5 ways that we make college more affordable. By doing the FAFSA, you are now making available that need-based aid, those loans, any grants that you might be awarded, as well as letting your students compete for those other scholarships. That's another reason why you're sending that FAFSA in. In addition to that, we're doing the special scholarships where, again, they're competing or they're in a musical talent or athletics, and then also the outside scholarships. So those are the ways that we're helping students if you're not familiar with what your students are doing right now. Next slide, please. Let's talk about the timeline. This is important. Again, we talked about October 1st being the start of the FAFSA. That's when you can begin. If you go in there tonight, you're working on last year's FAFSA, and you're just going to have to do it again. If you've already done it, I've had some parents come in and say, I already got the FAFSA started, I'm ready to go. Like, uh-oh, you need to go back and do it again because it's the wrong FAFSA. That's last year's FAFSA. It opens up the new one starting October 1st, and it will be open. There are going to be a lot of people on that application that day. So just expect it to be slow. Expect to maybe get dropped a couple times. That happens. If you do it at odd times, that might help you make it so that you can get through it more easily. But probably in the middle of the day on the first day, it's going to be very busy. Expect that. But you can complete this. If you complete this over the October-November timeframe, definitely before Thanksgiving, because there may be scholarships that your students are competing for, and you need to get your FAFSA and your EFC turned into that school, and you haven't done it, now they're not eligible. So we want to get it done as early as we can. It will help you in the end qualify for more money. Let's see. So January, March timeframe is really key. That's when you're going to start seeing financial aid packages. So yeah, you're not going to see what it costs to go to college until around spring break. That's a long time to wait. I know a lot of kids are coming in right now. I just had a kid tonight saying, hey, I got in and I got this scholarship. That's great. That's just the merit scholarship though. The FAFSA hasn't even been filed yet. So there may be more money coming. The school has an opportunity to offer more money to attract your students. So be patient. It takes time. This is the hardest part, is that waiting period between getting accepted and then making the decision as to where I'm going to go. So be patient and wait for those to come in. They usually are in by, that mid-March, end of March kind of time frame. You should have all of them by then. And that'll tell you exactly what it costs for every school that your student is applying to. So you can start making decisions based on those costs. After that, then we recommend during that March and April timeframe, in between I've got 2 or 3 that I've kind of got it down to, and I haven't been able to decide on the one. Over the next 2 months, it'd be nice that your student get to attend and go and see those schools again, even if they've already done a visit. That's a good chance to go back to their top schools, maybe their top 3 or top 2 that you kind of got it down to. And look at them, make sure they're happy with it, that they feel like they can live there for 4 years because they're committing a long time to this. Mm-hmm. So you want them to be sure. So get them back on the campus, even if they have to miss school. They make exceptions for students so they can do that. And then by May 1st, you have to turn in the final decision. You have to send in the check to reserve your spot. Now realize before May 1st, every college is going to tell you about priority acceptance. If you send in their $300 today, and we'll put you in the best dorm. They're going to tell you to do that. Be patient. Wait this out. You're going to have many offers. We want to make sure you make the right decision. So I would suggest you wait until you've had a chance to go back to the schools again. But May 1st, you have to send in that final check. And so that's kind of the end of that time frame. So I want to introduce to you who's going to be speaking next. Karen Feemster is going to help you know specifically what you're going to do next once you start this process.
Thank you, Randy. And hopefully Randy's got you really excited to get started on this form, because now that you know all the different types of funds that could be available for your student, we want to make sure that you can maximize the award for your student. So that's by starting the FAFSA. So as you look at this blue screen, that is what you're going to see when you log into the site on October 1st, and you'll see studentaid.gov. You can also type in FAFSA, the free application for federal student aid, and this will pop up as well. But that's what it should look like. Complete the FAFSA form. This is a government form, so everything tied to it should say government. Now, the next thing is that you're going to have to check your dates, because this can be very confusing. Tonight, we're talking about our class of 2023. They are going to need funds for fall of 2023 and spring of 2024. So if you were to happen to log in right now, guess what? You're going to see a form, like Randy said, that's going to have a different date on it. It's going to say 2022, because that's where we are right now, fall of 2022. So there are still some families out there that could be seeking aid for the semester or maybe the spring semester. So think of this as your class of 2023, and they need funding for 2023 through 2024. Now, to further complicate things, it's going to be based on tax information that you filed back in April, hopefully, if you got your tax returns in on time, and that's going to be for tax year 2021. So lots of different dates out there. If you're confused about that, please ask one of your Class 101 planners, because we want to make sure that you're filling out the correct form when it's time to fill that out. So once you have that in place, there are a couple things that you can do prior to October 1. And that's going to be over here on in the picture to the right of the blue form where it says Federal Student Aid. We are going to have you set up or create an FSA ID. This ID is going to consist of a username and a password that both a parent and a student will create. So there'll be at least two. Now, both parents can have their own FSA ID if they want, but only one parent is needed to sign and one student is needed to sign to make this official. And when you're creating this, make sure that you are using parents' information for the parent one and student information for the student one. Now, for purposes of our discussion tonight, we know that the majority of students are going to be dependent students. That means that they're dependent on their parents for income. So the advice we're giving tonight is for dependent students. If you have one of those very special, unusual circumstances where there's an independent student involved, please contact one of us. There's a very long list of criteria that you would need to check through to see if your student is independent. And actually, when you get into the FAFSA, it's going to ask you some of those questions to help you decide that as well. But for tonight, we're going to be talking about dependent students. So to create this FSA ID, you would go to the same site. And then what I usually do is hit the good old search bar there and just type in FSA ID, and this page will pop up. You're going to need name, birth date, and social security number. And again, make sure that all of the parent information is only the parent information, and all of the student information is only the student information. And you're going to keep this FSA ID for 4 years, because guess what? You don't just file it this year. We're going to encourage and recommend that you file it every year that your student is in college. even if they don't qualify for aid that first year, because circumstances could change. The student might not do as well one semester, and maybe some of their funding goes away, and you might need some additional help. So we recommend filing it every year that your student is attending college. The other thing that we will do now that we have our FSA ID, and by the way, after you create it, you will get an email saying, hey, your FSA ID is ready to use. So if you do have the opportunity to create it before October 1st, that just lets you get a little bit further down the road when it opens. So I have a form in my office, so all you Tennessee folks see me, and I'll help you keep up with that, and I'll happily share it with all my other franchises too. But now, as you're completing it, guess what you're going to need? Some information about your personal income and assets. We will be supplying our parents with a questionnaire of all of the things that they will need to get together before October 1st. And then we will start entering that information in. The best thing that you can do for yourself is to have your tax return filed. So if you filed it in April, that's wonderful. There is a tool within FAFSA called the IRS data retrieval tool, and it is only going to pull down the numbers that it needs. So if you're worried about somebody looking at every detail of your tax return, that is not going to happen. Only the numbers that are needed to compute our EFC, which we're going to talk about here in just a minute, are going to be from there. So, and then we'll talk about the rest of the questions. So if you do have your tax return, you're good to go. If you're filing an extension, as I have been known to do sometimes in October, you might want to wait a few weeks for that tax return to be processed by the IRS before you start your FAFSA. You can go ahead and enter those numbers in manually if you choose to do so. So it just goes a little bit quicker, and you will have to verify that. So now you have entered everything into the FAFSA. So what's going to happen after you do that? Well, you're going to get a student aid report. And in that report, it's a one sheet of information that says, hey, we put these schools on our list. And at the bottom, you're going to see a number. And it's right now, as Randy indicated, it says expected family contribution. They're changing the branding of that. So it's going to be more like an index. And that's truly what it is, because the EFC is not what you are going to be expected to pay for college. It is just an index that the computing service is going to send out to the colleges that are on your students list, and they are going to match that number against the total cost of attendance at a school. So total cost of attendance, that includes tuition, room, and board. Those are the things that a college is going to send you a bill for when your student starts classes. Now, there are other things included too, books and fees, and just other expenses that a family is going to incur because their child is not living at home. So the government takes all of that into consideration, that yes, you're going to be paying for an education and a place to lay your head and eat, but there are other things that are going to be in there. So that is going to come up with a broad number called the total cost of attendance. Now, for this particular instance, we have a total cost of attendance of $55,875 for this one particular school. And our family has come up with an index expected family contribution of $35,000. That $35,000 is going to be deducted, and what is left over is a family's need. So need in the college funding world is very different from need as in we are getting government assistance for daily living. This is a need because college is expensive. This is why we do what we do. College is expensive, and we want to help our families make the best choice when it comes to funding their education. So as you can see with your need, we want to help our families, if they can, find ways to lower that expected family contribution. So let's understand what goes into that calculation. As Randy mentioned earlier, there are 4 main sections. So there's going to be income and assets on the student side and income and assets on the parent side. So for the student side, if a student has income of approximately $7,100 or less, it's going to generate a 0 expected family contribution. So that's desirable because that keeps your EFC low, correct? So about $7,100. So this could be your student has a job, your student maybe, as some of my really savvy students down here in Tennessee have started their own companies. We want to see what that income might look like. Assets, we would like it to be very close to zero if you want to have a low expected family contribution. And so again, we're talking about dependent students there. So most of their assets are coming from their parents. So two sections for the students, income and assets. And then the next section is going to be our parents. So our parents' income. So income for a parent or a family is going to be about $29,000 is going to qualify for a low or zero expected family contribution. The chart to the right, you'll see there's some calculations there. It may change as the form opens up on October the 1st, but in general, for every additional household member, you would add about $5,080 to that income, and that's what would be able to have that family supported. And then for every student in college, there's a deduction. So that's one of those things that we're watching to see what that's going to do if we have multiple students in college in the future. But for right now, that should be favorable for a family that has students. But again, we're waiting to see. So income, very simple. It's going to be income from your tax return, your adjusted gross income. Okay, there's not a lot of magic that happens with that. If you have your own business, there could be a little bit more involved. And for those of you that use a tax planner, those documents have a way of, if you let them know that you'll be submitting the FAFSA this year, there's a form that your CPA can provide you and say, here are the numbers from your tax return that will be used to put into the FAFSA. So next up, we're going to have assets. We get lots of questions about assets. Okay, so first of all, parents are nervous because, like I said earlier, college is expensive. And they're like, okay, am I going to have to sell my home? Am I going to be just living on the street? What exactly am I going to have to do to make sure that my student can afford to go to college? Well, the good news is that you get to keep your home. Now, if you have a second home or even a third home, that's a different story. But your home that you reside in, your retirement, those things are not going to be considered an asset. So understanding what your assets are and are not are the most important factor. 529, that's another popular question that we get. That is the asset of the parent. Okay. And if you have questions about where that needs to go, just let us know, and we can talk to your financial planner and see how that was drawn up. But 529 are the parents' assets. So just in a nutshell with assets, you're going to include what is in cash in your savings, in your checking account. That's going to be your assets. If you do have a business or a farm, it's going to depend on how many employees you have. And if you have any investment farms, or if you have other investments, but remember the things that are retirement, you're not going to include those. So we will go next to what do we do with this information? So you know that you're going to create an FSA ID. That's something you're going to keep in a safe deposit box someplace where you can access it so that you can log in. You're going to make sure your tax returns are filed before the October deadline, so this can go really smoothly for everyone. You're going to then fill out your FAFSA questionnaire from your local Class 101 college planner. That makes sure that you have all of the information needed and ready at hand if we're going to be helping you and assisting you with those forms. And then you want to set up a meeting to help you get that application completed as early as you can. I usually recommend in my office, we have some state funding down here that's really important. And so we try to get things done before Thanksgiving. But just know that you are going to be supported in this process. We want to help your child. We want the focus to be on your student to find the best college possible. And we also want to support our parents to make sure that once they do make that choice, that it's an option that's going to be affordable for everyone.
All right, thank you, Karen. We are getting dozens of questions and answering those feverishly in here. And I have a couple for you and Randy here in a second. And we're just making sure we're getting all the, thank you so much. There's people from all over the nation, single moms saying, I can't afford college. How do I do this? This is where you would start. Get with your Class 101 advisor or one of our local locations. What you're seeing here is where some of our locations are across the country. So we have over 50 locations in 25 different states. You can see where it says info@class101.com. If you want to reach out to your local person, we would hope that you would do that, because then you could have contact, or they might be in the same city. It might be a particular place you could stop by if you're not already a Class 101 client. If for some reason, if you live in a state that's one of the gray ones, or we don't have a location, you can reach out to your local, your closest location, or the info@class101.com. Reach out there with questions, and we'll do everything that we can, especially if you're on this seminar, because we sure appreciate your time and effort tonight, but we want to do everything we can to help you fill out this form and be ready for it. So a couple small things, and then Randy and Karen, I got some questions for you. Well, I'll put you on the spot here a little bit, but first of all, let it be known, we recommend that everybody do the FAFSA, right? So no matter where you are in life or income or assets, and please, everybody do it. There's lots of reasons why to do it. It's free, so it doesn't cost you anything. It'll probably cost you a couple hours worth of time to go in and do that. And ideally, let it be known also that we want it to be done as early as you possibly can. So the earlier, the better. So preferably as quickly in October. If it's November, that's fine, but preferably the quicker, the better as far as that goes. So Randy, we have a question for you tonight. We just received literally dozens and dozens and dozens, and I think we have them all answered. We're going to stay on later tonight. So once the seminar is completed, we will stay on in case there's additional questions, or again, if there's something you want to ask specifically, we want to make sure we get to that. Randy, somebody asked, since you were talking about merit-based scholarships, the importance or not now of ACTs and SATs, score optional, different types of things like that. How does that work or not work?
Sure, that's a good question. You're hearing in the news, SAT and ACT scores are optional at a lot of universities. 1,700 of the more than 4,000 schools now are offering test optional routes into the university. But what they're not telling you is that most of the most selective type opportunities, for example, if you want to go to that program at that university that's tough to get into, you need a test score to get into it. Or if you're looking for a certain scholarship, they're going to require a test score. So rather than automatically deciding, hey, we're going to do it, we're going to apply to this school because we've heard we can get in without a test score, we recommend that you take the test, try to maximize your students' opportunities. There's still time for seniors. You can go up a couple, we've got the October test coming up. We've got a November test. So you still have a little bit of time to test some more if you haven't hit that number yet. And the higher that number goes, the more scholarships that may be connected to it. So we would highly recommend you continue to test. Testing is still important until they go test blind. That means test scores are going to be looked at. And the only schools that are going test blind that I'm aware of are the state of California. So if your schools, if you have any other schools, they're going to look at those test scores. And if you got good scores, you're going to get the advantage of those scholarships and those opportunities that somebody that didn't send a test score in might not get.
Thank you, Randy. Karen, we got a lot of questions from a lot of Jays around the country, Jason and Jennifer and Fulan. But again, can you repeat stuff on assets, what's not an asset, and stuff like with Roth IRAs and things like that, since we have a bunch of asset questions.
Okay. Yes. And I was trying to type some answers in for some of those too. So yes, those are good. So assets, I'm just going to read straight from the site. Assets do not include the home in which you, the parents, live in. They do not include, and these are do not include, farms that are the principal residence of your parents or the family. So you could have a farm that you're actually a farmer on that. UTMAs, if anybody still has those, are custodians, but not the owner, the value of your life insurance. And then for those of you asking about retirement plans, 401ks are not included, pension plans, annuities, non-education IRAs, KEO plans, IRA, and all of the types of Roth IRAs, those are not included. So if it's retirement, Now, there was one person that was asking about savings and what date, if it's not in, if it's part of their retirement, but it's actually just in savings. When it asks what your cash is on hand, it's actually the day that you file the FAFSA. It'll say, as of today, what are your current assets in checking and savings? So.
Great. Thank you. I do see a question in here on how much Class 101 costs. Well, like tonight, I can tell you it's free. And so we'll offer free advice and so on. Please get with your local location. We obviously have some different prices for different locations in different markets around the country, but it doesn't cost you anything to do a consultation and to learn about your own individual family. So thank you for that question. Randy, can you talk to us about maybe like an unusual circumstance? Somebody became, maybe unemployed, or something with COVID has caused them some, what happens if something like that's happened in the last year or so?
Yeah, thankfully, the universities are pretty generous when it comes to situations like that. They will consider any of that type of thing that may have happened to you. Maybe you've had a medical emergency and you've had a lot of bills because of you're on a very expensive medicine, or you've had to have a lot of physical therapy, or we lost a job because of COVID, or our business shut down because of COVID. All of those things they will take into consideration. Now, how do you actually do that? You still fill out the FAFSA with the information they're requesting. So if they're requesting your income from the taxes, you're going to put that number in there, even though that has changed, right? So if your income went to zero or half of what it was, you're still going to put in that year's tax, or that year's income information that they're requesting. And then after you've submitted it to the university, then you're going to contact the university financial aid department, and they'll have a form for special circumstances that you can fill out. And they're going to have a lot of questions on there because they want you to prove that it's all true. And once you've done that, they will reconsider the amount of award that they're going to give you and what they're going to request for you to pay. Typically, they're going to respond to it. If it's had a major impact on your family, financial aid offices are very cognizant of that and are pretty generous.
Great. Thank you, Randy. Also the same thing, if you had an unusually high year, I see a question in here, right? From maybe last year was a great year, but it's not your normal year. You can maybe explain that to a particular college as that's going through. Karen, do you see that question on traditional or selling a piece of property? When should I fill out the FAFSA? Some of those types of questions.
Okay. And then, yes, I was looking at the one that they want to sell the property on October the 4th. And so it depends on when that's going to close, because remember, if you're going to realize a gain, you're going to have to answer the question, what was that gain? Now, if it sells and it's going to take a while to affect, it's actually going to affect your tax return for next year. So it wouldn't affect it necessarily this year. So it depends on what the closing is for all of that.
Yeah. And sometimes some of those assets could be paid down on your home or other things that are not considered assets. That might be a good piece of advice.
Right.
Everybody's situation might be a little different, so it would be worthwhile, please, to go through your scenario with your local Class 101 advisor, just to make sure we're giving you a little bit of high-end advice here, as far as that goes. All right, so we'll answer a few more of these questions. It looks like if we have 529 plans for each child, do all the accounts count as one for our child that's filling out the FAFSA? Randy, do you want to cover that one?
Sure, yeah. So remember, Karen said that a 529 is an asset that's owned by the parent. So when but you have selected your student that it's going to be as a beneficiary of that. So, and you've split the amounts, and you've said this is going to go to this kid, this amount's going to go to the next kid. That doesn't matter. You are the owner as a parent, and so it's going to go in as a parent asset. It will not be a student asset unless unless the student is actually taken out of 529. I have had a situation where a student had an income and actually was putting away money into his own 529. And in that case, it would be owned by the student. But most everybody, I would say 99% of the people, that 529 that you took out is a parent asset. You put the money into it. you're getting the tax advantage or whatever your state advantages that for. And so then it's yours, you own it, it's your asset.
And so if they have 3 kids and 3 529 plans, $10,000 in each one, it goes $30,000 on the form.
You got to put all of it on the form for that first student. You can't
That's right.
do a third,
Right,
a third, and a third.
Right, that's right, because you can mix and mingle. You could, even though you have it divided and you love all your kids equally, believe me, the college price never comes out equally, right? One's probably going to be more expensive and less than another, and so on. But because you can shift that money and it's all owned by parents, all the 529 money does go on the form. That is correct. Great question. Okay, the unusually high one, the Roth IRAs. Again, thank you, team Class 101 and all of our people that are answering this. Rental property. Karen, can you cover that one? Rental property considered as a parent asset?
So it's going to be an investment. We're assuming that you're making some money on that. So that is going to come in the other investments. And so when I was telling you the assets not to include, the assets that you do want to include, as we've been talking about just briefly, is the cash in your savings account, investment farms, other investments. So that's going to be stocks, bonds, certificates of deposit, anything that the parent owns as an investment that is going to be included on the FAFSA.
Yeah, and the equity, right? Not necessarily the value, it's the equity that you have in that piece of property would be considered that asset part. All right, so does Super Score count for scholarships? That would depend on the school. So please check with your school, because there are colleges that do use Super Score and some don't. There's probably more that, what do you think? Don't, Randy? Probably right. Probably don't use Super Score. It probably depends on your state there. And again, this is a whole new year, right? So please do check with your schools on Super Score as far as that goes.
And one other point on that is some schools will use Super Score to admit you, but not use it for scholarship. So you need to know every school is going to be different, as Tom said.
Yeah. And then we have some questions on Karen, can you handle divorced families or maybe blended families? The kid lives with, it looks like mom and stepdad. So how does that work when filling out the form?
Okay, so as far as FAFSA is concerned, for a divorced family, it's going to be first of all, the primary custodial parent. That's who is going to fill out the FAFSA. And then if it comes into a 50-50 situation, then it gets down to who they live with, and then some other things from there. But in general, if you're just completing the FAFSA, it's going to be the primary custodial parent. Now, there's another question on here that someone had asked about the CSS profile. And so we did not talk about this tonight, but that is something on College Board's site that a lot of private schools will also require in addition to the FAFSA. And yes, this person was wanting to know if home value is included. Yes. FAFSA doesn't ask you the value of your home. It does not ask you the value of your cars. However, if you do have to fill out the CSS profile, you're going to have some more financial information that you're going to have to gather.
Yep. Perfect. Yep. FAFSA is more of a federal, maybe a state form. The colleges use it as that index number, or now EFC number as we know it, and so on. The CSS profile tends to be a lot of the schools' own money for their endowments, so they can ask more questions to really get down. But they do have lots of money to give. So sometimes those very, very top schools, Ivy League schools, might not give scholarships. But if you do qualify for a grant, you could get a $20, $30, $40, $50,000 grant, even though you're a middle-class family. If you saw the new article from Princeton, I think it said, what, 120,000 or less in your family, and if you get in, you get free tuition. So please look at that article. It just came out. I'm going off the cuff there, but something very similar. I imagine making $100,000 and being able to get free tuition at Princeton. So different schools do it differently. So please get yourself educated on your schools as much as you can. There was a question about handling changes. Thank you very much for typing that in. We will be sending out updates. So please do check our Facebook page or your local location for updates on changes. Again, we're doing this 2 weeks in advance, right, of the FAFSA coming out. So we believe, but we'll know, and we are talking about the government here, right? So who knows, there could be some changes. That tends to happen every year to us, some surprise changes. We anticipate those again. So as of now, this is what we know. October 1st, we'll know for sure. Any updates, you'll see those in all of our particular locations. Is there an amount of savings account that we should be under? For parents, you're going to get that asset protection allowance, so you would want to have that. For students, we advise that we would want that to be as low as possible, ideally for students, as far as that goes. I believe they have a primary home value. Yes. Okay. I'm just going through these. Social Security numbers. You do have to be a U.S. citizen and have a Social Security number to be able to file for FAFSA. So please do look into that. There are some different things with immigrations and visas and different types of student visas and so on. But the federal financial aid system for U.S. citizens is driven by a Social Security number. Okay. All right. Those are great questions. We wanted to cover these because we really like to make sure, remember, we're talking about 2021. So when you're talking about, it might be alimony received or child support paid or disability income, it's probably all going to be focused on the year of 2021. I see a lot of those questions in here. So please think 2021, what happened that year? What did I pay or receive, or a dividend income? Those types of things are probably going to be on your taxes already. So those will probably be an automatic fill out with that IRS data retrieval system. But it is worthwhile. That's why we have a questionnaire. Karen's advice was beautiful. Do that, get your FAFSA ID number, do all that now. Have your questionnaire filled out in the next couple of weeks from your Class 101 location. That will organize you so you can kind of have all your questions ready. So if you do the form, that's great. Maybe we're helping you to do the form in our Class 101 location. We'd be honored to do that for you if you wish, or just set up a time in the first couple of weeks or throughout October to be able to have that done too with your local Class 101 advisor. If I file my tax return in October, when should I file my FAFSA? I can tell you, you would want to file it, your taxes electronically. Please do that first. Don't mail them in because it takes a lot longer, right? And then, like Karen's advice, what was to wait a couple weeks, probably, Karen?
Weeks. 2 to 3, yeah, 2 to 3 weeks, maybe like the beginning of November.
Yeah. For the young lady on the losing your spouse, again, that's one of those unusual circumstances. We're sorry to hear that, but we know that sometimes that happens. And so what might be last year is different now. So fill it out as you know it last year with 21's income and maybe your spouse was on there, but then do get with the school and inform them of a passing of a spouse. We're sorry to hear that. And then again, stocks, shares of stocks. Again, if they're not in a retirement vehicle, then you're going to put them on there. This is a record for questions. I mean, we got like 50 some just here on the board here. So this is wonderful. So thank you for all these questions. Again, the recording, let's get into that. And we're going to wrap this up here tonight. The recording will be made available. There's a lot of information. What Karen said tonight and what Randy said tonight can really make a big difference for your child, for the system here. We provide this because we believe in doing everything that you can. They've worked hard in school. They're going to get those merit-based scholarships, other things. Tell them to keep working hard for the rest of the semester at least, and then they can be done. They can test and grades and so on. But in general, right? And then do this do the need-based aid and this FAFSA as quickly as you can, and that will help you too with another way of getting extra money or filling out that financial aid package, like Randy had said. The recording of this will come out. Look for that tomorrow. And so in your different locations by end of the day tomorrow, we should have that out either in your local location. If you're on here, you're going to receive or be seeing this in many different ways. We're thankful that you're here. And this is one part of it. But as we know, an important part is we do everything we can as parents to make a college affordable. Thank you so much, Karen. Thank you, Randy, for your time and expertise. We have a lot of those experts around the country. Lean on them. This is what we do and what we're passionate about, and we're honored to help everybody around the country. Thank you. We'll stay on for another 5 or 10 minutes, but officially our webinar is ended. Thank you, and we'll look forward to seeing you hopefully in one of our Class 101 locations soon. Thank you now.